Good morning, it's Joe Neighbour from Signal Centre, and today I'll be going through another FX roundup for you all. And today's Bank of England day. At 12 p.m. today we have the latest decision on interest rates and policy. No changes are expected, but obviously there will be discussions and commentary with regards to where next for the Bank of England in terms of tapering assets, in terms of adjusting interest rates, and also tackling inflation. So it's due at noon. No change expected in the 0.1% bank rate is on the cards, but officials may move closer to tightening monetary policy and unwinding this massive £900 billion government bond purchase programme, while also opening the possibility that borrowing costs could be pushed below zero. Most economists expect the bank to lower the level of interest rates needed before QE starts to unwind, and at the moment the bank has suggested that the rates need to move to 1.5% before they sell bonds. So this is opening the possibility of negative rates, which may allow the Bank of England to act before the rate rises to that level. So with that in mind, it's worth taking a look into sterling today on the charts to see how things are shaping up ahead of the event at noon, and whether or not there are any potential opportunities from a trading perspective today. So in front of you today I have the daily chart for cable, sterling US dollar, and as we can see, we've got these two highs that have been posted around about 142.41. So this is obviously the major resistance line on cable. And for me, what we are in the process of doing is potentially confirming a double top pattern. Now, I believe there's a bit of a fake move or a fake out that occurred down here on the 20th of July when we actually broke through the key support at 136.73, and for many technicians this would have triggered the possibility that the double top pattern had actually completed and lower prices can then therefore be expected over the medium term. From a technical perspective, people or traders would be looking to sell into a retest of that neckline at 136.74, but as you can see, prices significantly overshot that to the upside, and we saw a really quite sharp corrective move higher, which eventually petered out around about or just in front of the 1.4000 level. So in recent session, things have calmed down a little bit. We've seemed to have broken out or broken below this short-term corrective uptrend, and prices are stalling. We have made a couple of attempts at pushing higher, but they seem to have been met with selling interest. So, of course, how prices dictated from here will be a lot dependent on what goes on with the dollar index. But in the short term, for me, this looks a little bit confused and probably going to be quite difficult to find any trading opportunities. And obviously, come 12 o'clock today, we could get some spikes in volatility. And obviously, if you're the right side of that, it's great. But if you're not, then things could turn sour pretty quickly. So let's just take a quick look at the intraday charts just to see if there's anything offering any clues. This is the hourly chart, and as you can see, prices seem to be ranging between sort of 138.75 to 139.81, so near enough a sort of 100-point range at the minute. We have had a decent bounce from the lower end of that, so for any eagle-eyed traders who are looking to trade on a very short-term basis, could have potentially had some orders down at that level to try and capitalize on a bit of a bounce. But at the moment we're sitting kind of mid-range, so limited opportunities, probably a bit of a holding pattern I would imagine ahead of the rate decision at 12. Looking at some of the other sterling markets, I'm going to take a look at euro sterling and just go back to the daily chart here. So this really has been a very tough market for traders over a number of months. As you can see, price was trapped within this big sort of downtrend up until April earlier this year, where we saw quite an impressive break to the upside, but it appears as though that move was only a corrective one, as we haven't been able to build upon that thrust higher, and instead prices actually continue to grind lower over recent weeks and months. Now we do have a big line of support in at around about 85, 0.8511 is the key level I've actually got drawn on my chart, which is also an 88.6% Fibonacci level. Not the most well used, but for me, it's often that kind of last line in the sand that prices need to break through to invalidate those Fibonacci levels. So a key level for me here, we haven't seen any kind of massive close or impulsive close below this level. As you can see here on a number of occasions, it seems to have done a pretty good job of support. So will that happen again? who knows? If we do get any announcement from the Bank of England that's seen as negative for euro, um, or positive for sterling, then we could continue to see this moving lower. So that would be sterling positive if this does move lower. The next level below this support at 85.11 is down at 84.72. And if that breaks, then there is obviously a hell of a lot of fresh air for that to move into to the downside. So keeping an eye on that. Again, just have a quick look at the intraday charts to see if there's anything that is materializing. And again, we've got this support level at 85.00 on the intraday chart. So that's the key level that will be of interest today ahead of the Bank of England announcement at 12 o'clock. Hopefully that's been insightful and given you a bit of a steer on where to go with your trading today. I'll be back next week with some more roundups on the FX markets. And until then, trade safe. Goodbye.